I spoke earlier to Jonathan Barratt, Managing Director with Commodity Broking Services. Jonathan Barratt, welcome to the program.
Good morning, Whitney.
All right, so we've seen copper, it's risen the most in a month. Why is it rising so fast and so high?
Yeah, Whitney, it looks like there's a combination of things which are actually occurring. And I think that the most important, particularly that move we had last night, was on the back of our Chilean mine, the Xstrata-owned Cajahuasa mine. Looks like we're having more labour disputes there. That caused an increase or a quick sudden spike to the metal. But I think more importantly, the market's decided to focus on what's happening in China, particularly with the PMI, the Purchasers Managers Index. The HSBC preliminary flash index actually came in, suggested that the economy was contracting. It is interesting because when you think the economy is contracting, you would think that copper should come under pressure. But that's not what the market and how the market is reading it. The market is saying if the economy continues to contract, then the tight fiscal and monetary policies that the Chinese authorities have put to play will change. The rhetoric will change and we'll get looser policy. As a result of that, demand for copper will obviously start to increase. So there's this change of rhetoric within China concerning the way we see monetary and fiscal policy, and that's creating that underlying theme that copper can go higher from here.
Now, we've seen overnight it's jumped about 2.7% for March delivery. So where do you see it climbing to then?
Look, I think at the moment, if we look at the COMEX contract, if we can see it break through 340, 345, 341 was the high last night, then I think we can actually see quite a substantial rise in copper back up to that US 380. So we are looking for a good 10 to 15% move on the top side over the course of the next couple of weeks. The key is it sustainable? And I think that's something which we've got to look at because there's still a lot of concern out there. And I think the market at the moment is looking at optimism versus reality. So at the moment, we're optimistic that the price will move up, but given reality, it could come under pressure once it gets to those 380 levels.
Now, you talk about this change in rhetoric in China. Do you think, though, and that could actually, spark copper to rise further, but do you think that would bring other commodities under pressure?
No, not really. See, what it's actually doing, it's saying, well, OK, we've lived through a tight fiscal system in China for some time. We know the economy is contracting. What it's actually saying to the market is, hey, look, everything was how it used to be. You know, we've got to now help the economy along, so we're going to loosen this fiscal policy and monetary policy. As a result of that, you should see demand for a lot of other commodities start to come back into play. So this is a game changer in terms of the weakness in the commodity markets that we've seen over the course of the last month. So it is important that we really focus on the PMI data coming out on the 1st December, because then from there we should see a Christmas rally for some of the commodities.
What role does this perceived optimism in the United States off the back of these retail sales figures on Black Friday and also some growing confidence in Europe play in the commodities sort of picture?
Look, it's really important. At the moment, you see that the market, the powers that be, are focusing on really just positive news out there. You know, there are a lot of issues still to be had, a lot of issues still to be solved. But each level of good news, we're seeing it overplayed in the market. That in itself creates this optimism that, look, everything's all right. And that's why I mentioned, we've got to be, it's optimism versus reality. There are still major concerns there. But if we can create an optimistic overview of what's happening, Europe's sorting out its problems, retail sales in the States are starting to boom, record levels, then that creates this confidence that the contagions which we've lived through will actually turn around and we could get out of this mess quite easily.
And do you think that that's what's pushing oil higher too? It's gained as much as 4% and it's over $100 a barrel.
I think it's oil. Yes, that's been certainly a significant player, in terms of that optimism to keep oil pushing higher. But I think on the other side of it too, there's these major concerns we've got in Iran and Syria, and to me that is it's a powder keg at the moment with Iran, because we really don't know what's going to occur there. So I think crude oil in itself remains relatively positive, and that US 100 is a key. The next level is 103. I really don't want it to move too much higher than that, because that in itself will start to stall growth. But if crude can stay in a reasonable range, 93 to 98, then I'll be quite comfortable.
But if we see the problems in Iran escalate, then will we see a 103 level and even further than that?
Absolutely, Whitney. If those problems escalate and we see some form of retaliation, I don't think you're going to get much change out of 110 or 120.
All right. The other thing that's really interesting is that gold rallied overnight. What was driving that?
Look, I think it's interesting with gold. Purely, I think gold has reached a level. But once again, if we get this level of optimism coming through the markets, then we have that inflationary concern again that starts to come to bear. The other thing is that the US dollar, if in fact this level we've seen the US dollar under very well bid over the last month, if that starts to come under pressure, then that will also support gold. Gold has reached a level, and that rally last night, which we saw, which was up 34, suggests that it's reached a level of importance or support. So as a result of that, I think you can see gold start to trend higher from here.
So no, volatility won't impact it, it won't pull it back then?
At the moment, it seems to be a flaw. Whenever you get these good, sharp rallies from good areas, 1780, before it was 1720, all these sorts of things, it is quite it's positive for the market to continue to trade higher. So I think, if anything, you've got a bit of a flaw for gold, and I think as we head into Christmas, you'll probably see gold prices trend a little bit higher.
Jonathan Barratt, thanks for joining us.
Thanks, Whitney.